headline that is making news is about SVB. Let's get in the latest update because the US FDIC has gone ahead and plugged all Silicon Valley's deposits and a substantial part of the assets from the now shut to newly created Bridge Bank. Now, Tim has been made the CEO. To add some context to for our viewers, a Bridge Bank assumes certain liabilities and assets of the failed bank to bridge the gap between the failure and the time that the regulators take to stabilize the situation. Now, in more updates, HSBC's UK arm will be acquiring SVB's UK arm for a sum of £1 to protect the deposits as well. Now, US President Joe Biden has reassured people that the country's banking system is safe in the wake of a sudden collapse of SVB. Added that the taxpayers will not bear the brunt of the fallout. Let's go across and listen in.
No losses will be borne by the taxpayers. Instead, the money will come from the fees that banks pay into the Deposit Insurance Fund. Because of the actions that our regulators have already taken, every American should feel confident that their deposits will be there if and when they need them. The management of these banks will be fired. If the bank is taken over by FDIC, the people running the bank should not work there anymore. Investors in the banks will not be protected. We must get the full accounting of what happened and why those responsible can be held accountable.
And staying with the Silicon Valley fallout, then shares of Charles Schwab saw steep cuts as the lender defended its portfolio amid a flaring financial crisis in the US. The Texas-based financial company closed the session 11.6% lower, adding to the 23.3% cut incurred earlier. Now, amid the trading session, the stock was on track for its worst single-day sell-off ever. First Republic shares too bled and fell as much as 67%, even as the lender tried to allay concerns over liquidity amid the SVB failure.
And let's keep all eyes on the key macro data from the US, that the all-important CPI figure expected later today. Inflation in the United States may have cooled off in February, but the economists still vary. Now, according to the street estimates, the figure expected to witness a 0.4% month-on-month rise or a 6% from the previous year rise. Let's move on and talk about Pfizer. The global pharma giant Pfizer announces acquisition of American biotech player Seagen in $43 billion deal as the company looks at expanding its cancer portfolio. Now, together, the companies seek to accelerate the next generation of cancer treatment, antibody drug technology coupled with Pfizer's expertise and capabilities.
And China's new Premier Li Qiang says key focus of the country's policymakers will be on growth with special attention on need for housing, income, education and healthcare. Going forward, the focus will be shifted towards delivering a life of better quality for the people, added Qiang.
And leaders from US, UK and Australia have unveiled details for their next generation nuclear power deal. Under AUKUS deal, Australia is all set to first receive at least 3 nuclear-powered submarines from the US. The allies will work together to create a new fleet using cutting-edge technology. Now, the setback is aimed to countering China's influence in the Indo-Pacific region.
And reports suggest that the Kremlin is clearing Putin's schedule for a potential G20 visit for the Russian president. Putin has not left Russia since launching an offensive against Ukraine in February last year. A Russian spokesperson said that the visit cannot be ruled out as Russia continues to participate fully in the G20 framework, but also added that no decision has been made yet.
That was all the global update that we had for you all this morning. But we're going to sip in a short break. Don't go anywhere because we'll be back with more domestic update after this break. Welcome back, and you're watching Market Cafe on ET Now. As promised, let's get more domestic news for y'all, and let's talk about the CPI data. Now, yes, again, this time around, the inflation is above the RBI's tolerance levels. Let's talk about in now terms of numbers. Now, CPI for the month of February has come in at 6.44% against the estimates of 6.4%. It still remains above that RBI's target of 6%, which it did for the second straight month, as January the print came in at 6.52%. Now, urban inflation too increased, but the rural inflation saw some bit of a cool-off coming in. Let me go across to my colleague Harsh, who will give us a breakdown on these numbers. What is it indicating as well, Harsh?
Well, yes, let me break this down first. The inflation had actually cooled off to 5.7% in the month of December 2022. That has now gone back up to 6.4%. So that's definitely a concern for the RBI. And it's not coming off. So the January print was slightly higher than what was penciled in by most economists, and it's remained there. So the RBI, in a difficult macro setup, has its work really cut out for itself. In terms of where the inflation is coming from, food inflation remains sticky, power as well, and fuel also continues to remain elevated. So those are the core inflation itself seems to be quite sticky at the moment, which will be the challenge, and which the RBI has spoken in its Feb meeting as well, continues to remain the challenge for it going forward as well. So it will have its eyes on both of those, but rural inflation continues to be elevated. That was the also the key piece in January, and that has continued and spilt over to February as well. So those couple of pieces will have to be balanced off. And of course, the commentary of the RBI in April will be very, very interesting.
So we will be watching out for the RBI commentary in April. But, well, we did speak to Saugata Bhattacharya, who is the chief economist at Axis Bank, who thinks that India needs to be cautious of domestic as well as the global economic environment. Listen into what she had to say.
Given the risks that seem to be emerging, particularly on the food side, we need to be very cautious about the policy response to inflation. Two things. One, if the actual risks are more to the food, more from the point of view of food, then I'm not very sure whether monetary policy will have a dominant role to play in controlling inflation. Secondly, and that's what the El Nino forecast, the heat waves, etc., seem to be suggesting. On the other side, on the global environment, that's become very, very relevant now. So let's wait and see what the US CPI print will print at tonight. And then post that, what the Fed is likely to do on the 23rd. There are multiple risks in this environment with a growth slowdown. Again, input prices coming in from the global environment beginning to rise. So this is a worry. But now again, how much of a growth slowdown can you tolerate in the system, which might begin to signal some signs of incremental financial sector stress?
Okay, let's also listen into what the CII President Sanjeev Bajaj has to say from the CII event on India's startup ecosystem, which he says is to enable its own financial ecosystem, support budding entrepreneurs as well. Let's cross and listen in.
Today, in economic terms, we are increasingly seeing a multipolar world. Yet, we need to confront many common crises that are impacting our growth. Multilateralism is in flux, and global institutions are functioning below expected levels. A combination of 750 million smartphone users, one of the lowest cost data networks in the world, coupled with 1.2 billion bank accounts and over 800 million unique digital IDs, has created a whole new digital opportunity, which once again we can share with other countries. Third, with facilitative policies taking place, India is now the third largest startup ecosystem in the world, with over 100 unicorns and almost 100,000 registered startups. We believe that this entire culture on startups is one that drives entrepreneurism. It drives the basics of any society and economy.
And well, moving on, a private equity fund, Kedara Capital, acquired majority stake in Hyderabad-based dermatology chain Oliva Skin and Hair Clinic. And this marks the company's third investment in a single specialty healthcare asset. Now, what is Kedara's broader investment goal in the healthcare industry? Well, we spoke with the top boss Nishant Sharma at Kedara about this. Here's an excerpt from the conversation.
As you rightly said, Oliva is the third investment in the single specialty healthcare space for Kedara. We're very bullish on the overall single specialty healthcare services theme because it presents a very strong runway for growth. And ultimately, we look for three things in the businesses we invest in, right? Strong growth potential and a replicable, scalable business model, which Oliva, ASG, and Oasis, all three have demonstrated. I think the fact that in the last 9 months we've invested almost $200 billion in these three businesses is a testament to the fact that we're very we've got very high conviction in the healthcare space, and we'll continue to look for opportunities which meet the criteria I talked about earlier. It's we've invested almost $65 million in Oliva, and it's a significant majority stake. Obviously, Dr. Prashant, who's the founder, continues to stay invested and will run the business going forward.
Okay, on that note, let's just sip into a very short break. Don't go anywhere. We'll be back with more updates on the Indian markets after this. Welcome back, and you're watching Market Cafe on ET now. Let's just look at what the Asian markets are doing, as well as some bit on. I'm going to start with the 2-year Treasury yield of the US markets. The US Treasury 2-year yield has actually rebounded after the biggest slide it saw in almost decades. The 2-year Treasury yield slumped the most that we'd seen coming in since the early 1980s. Now, that was on Monday. Right now, we're seeing slight bit of a recovery. Look at the Asian markets. They have opened up in the red as well, given that the pressure that we've seen coming in because of the US markets, the SVB bank failure. Nikkei is down 2.27%. That is, overall, when you look at it, it's on track for the worst day that they've seen coming in since October of 11th. Even Japan's Topix is also seeing a sharp fall coming in as well, down more than 2% as well. This is the biggest one-day percentage drop in over 2 years for the Topix as well. Other than that, look at the Kospi, that too down 2%. So surely we are seeing weakness coming in the Asian markets as well, whether it's Hang Seng, Shanghai, Topix, or Kospi, all of them are trading in the red. Sharp falls coming in for the Asian markets, given the pressure that we've seen in the US markets. But what is the indication that we're getting in from the SGX Nifty as of now is a muted start. But do not forget, because yesterday also what SGX Nifty was indicating was a muted start, but by the end of the day, we saw how the Indian markets were actually falling, especially since afternoon. Then we're only seeing a fall coming in for the Indian markets, breaking that level of 17,200 for the Nifty and below that level as well. So that was an important level we were keeping an eye out on. As of now, SGX Nifty is down 0.18, up, I beg your pardon, 0.18%, indicating a muted start.
Yes, Winnie, there is pressure on the markets, and we did see a sell-off yesterday, like Nifty was almost down 250 points. Now, what could be the possible reasons for the sell-off in the Indian market? Now, our managing editor from ET Now, Nikunj Dalmia, has a take on it, and here's what he had to say. Let's take a look.
What is leading to this decline? And the decline, I guess, is very universal in nature. It is not restricted to just banks. It is defensives, IT, you would imagine autos. Very domestic looking markets are looking weak. I think that the selling today must have got triggered because of a large institutional selling that has broken the back of the Nifty. Up until now, we've been using the word range for this market, which is lower end of the range, market is finding support. At the upper end of the range, the market is finding resistance. Today, the range has been decisively broken. And when a range of a market which has been steady has been broken, it's just an indication of supply more than fundamental factors. Look at Adani group of stocks. Isn't it ironical? The problem started with Adani group of stocks.
Okay, and let's move on now. The Silicon Valley Bank has many stakeholders in India. So, how will this actually fall out in terms of the impact on the companies in India? Let's go across to my colleague Sharad, who's here to give us a breakdown on this.
Well, yes, almost 20 companies are there in which SVB is actually invested in India. And of course, in the weekend, there was an important development coming in where Vijay Shekhar Sharma had stated that SVB is neither an investor, neither a current shareholder in Paytm. Now, of course, without Paytm also, we see the investments coming in, that's coming to the tune of almost $1.1 billion. So there are certain startups also having tie-ups over here, such as ChargeBee, Postman, CleverTap, where there is a financing or the banking relation is there with SVB as well. And apart from that, also Nazara Tech yesterday explained that almost $7.75 million of exposure is there amongst its two entities. Apart from that, also Y Combinator-led startups, especially from India, most of them have financing agreements with SVB. Now let's look at the numbers, how they actually pan out of the investments made by SVB in India. Next, Paytm, there are big names such as InMobi, Bharat Financial Inclusion, Naptol, and all these important startups which are there, which are having the tune of more than $100 million exposure as SVB is investing in India. Now we can see these numbers coming in your screen. Apart from that, also Bluestone and Tutor Vista make it to the list. Now this data has been coming from the latest updated data coming from Traxon. Now also Axel, that itself is a VC firm that is also having almost 35 companies are having a tie-up with SVB on this, and that is something to watch out for. Apart from that, the question remains is what lies ahead for the Indian startups, and that's the important thing. This includes no new recent round of funding has actually happened by SVB, and the fundings which have happened were on low ticket sizes. Apart from this, the most SaaS companies in India which are having large exposure in US, they do have credit lines with SVB, and sentimentally there might be an impact as over the weekend the US VCs asked the founders to withdraw or limit their exposure to SVB. But what are the ecosystem members stating about it, and especially in the theme of India itself? Let me explain you that VCs are saying that there is enough dry powder in the system in the Indian accounts as of now. Apart from that, the government also will start meeting startups this week to discuss the impact of the SVB crisis, and Fed also actually stated today earlier in the morning that they'll be making available the additional funding for the startups. And lastly, even the UK's PM also stated that there won't be any contagion risk.
Yes, and well, speaking of the SVB contagion, Nilesh Shah, MD Kotak AMC, does not see an SVB-like moment happening for India. Based on the efficiency of the regulatory bodies here, he believes that the Indian banking system is much more resilient and robust than the US. Listen in to what he had to say.
So essentially, our banking system is in a far better position. For example, SVB, out of their $200 billion balance sheet, could put $100 billion into HTM category. That's not permissible in India. Reserve Bank of India caps how much you can put into HTM category. Second thing, in SVB, deposit outflows moved very, very quickly. In India's case, our deposit base is widely distributed geographically as well as across various industries. And hence, this kind of deposit outflow is unlikely to occur. Third, in SVB's case, they were focused on bulk deposits. In our case, it is retail deposits. And more importantly, our regulators are far more proactive compared to SVB. If you remember, way back in 2008, there was a run on one private sector bank because one of the ATM went dry. It was a local event, not even a regional event, but yet RBI intervened to ensure that that bank remained open and kept on sending cash to repay all panicky depositors. People who were driven by panic and rumor mongering withdrew money, and then next day they all came back to deposit thanks to the immediate intervention at the local level. In SVB's case, we saw Fed had to take few days to intervene. So put all these things together, better regulation, quicker responses, much diversified this deposit base. I don't think so. SVB kind of things will happen in quote unquote regulated and supervised sector of finance in India.
Okay, let's move on and talk about more stock-specific news, what is happening on the brokerages front as well this morning. And in the studios, we have Vamakshi as well as Lisa joining with us. Good morning to both of you all. Lisa, before we come to you, let's go across to Vamakshi. And what are the brokerages saying this morning then?
Well, absolutely, Vinny. Let's first start off with the sector that you track closely. We have a note that has come in on HUL, and that is coming from Macquarie. And what they're highlighting is that the channel checks are suggesting steady demand trends. In fact, the urban areas are seen to be leading the growth, and the normalization of input cost is one of the factors by which the margins could improve going ahead, in their opinion. And on the back of that, they've maintained an outperform rating on HUL, given a target price of 3,050 per share. The next stock on our radar is SRF. We have a note that has come in from Axis Capital. Now, what they're saying is that the refrigerant gas prices are seen dipping, but they're still remain elevated on constrained supplies. They also highlight that concerns on sharp correction in refrigerant gas prices are overdone. The price dip in select refrigerant gases calendar year 25 onwards are to be negated by the price jump in others. So given all these factors, they've maintained a buy rating on SRF, target price at 2,650 per share. And lastly, watch out for Paytm. We have a note that has come in from Citi. They're highlighting that the growth trajectory is seen to be sustaining for the stock. The market share was stable in the month of Feb as well, and they have several existing as well as emerging levers coming out for Paytm. And at the current market price, they believe the valuations are attractive, which is why they've gone ahead and maintained a buy rating on this stock, target price of 1,061 per share.
All right, Vamakshi, thank you so much for the details. We will be keeping an eye out on all those stocks for today. But Lisa, you have all the stocks that we need to keep on our radar. What has caught your eye?
Well, yes, definitely. Good morning. Starting with some corporate action, Apollo Pipes will be meeting up, the board will be meeting up to discuss the fundraising plan, and GAIL has declared an interim dividend of 4 rupees per share, and the record date is 21st March. Well, the dividend yield on the same is around 3.6%. Moving on to All Cargo, they have received NCLT approval for the scheme of arrangement between All Cargo Logistics, All Cargo Terminal as well as Trans India Realty and Logistics Park Limited. Krishna Diagnostic has operationalized around 100 more pathology centers, and this is across Mumbai. Credit Access Grameen, they have crossed a major milestone of achieving AUM of around 20,000 crore, and this compared to the AUM as on December 31st, it was around 17,700 odd crores. Tube Investments has forayed into CDMO business, and they have entered into an agreement with N. Govindarajan NG to incorporate a subsidiary for pursuing the CDMO business, and Tube Investments will be investing around 285 crore, while NG will be investing around 15 crore for the same. And lastly, on Data Patterns, they have raised 500 crore by issuing shares to QIB at rupees 1,220, and the major buyers include Tata AIA Life, Axis Mutual Fund, IDFC Mutual Fund, Nippon Life Franklin, Kotak as well as ADIA. So, well, these are the stocks that will be on investors' radar for today.
Okay, thank you so much for that, Lisa. But let's move on and talk about one specific stock that is going to be in focus as well, and that is JK Lakshmi Cement. They met with the management. Let's go across to Vamakshi again to tell us more about that as well. Vamakshi, what's the highlight that we're getting from the management meet?
Well, absolutely. Antic did meet up with the management of JK Lakshmi Cement, and what they're highlighting is that the company is targeting an EBITDA per ton improvement of nearly rupees 300 per ton to 1,000 ton over the next 18 to 24 months. Now, out of the 300 per ton improvement, they're expecting 200 per ton improvement to come in by realization improvement, by optimizing their geographical mix, as well as increasing the trade out premium product sale. They're also targeting rupees 100 per ton improvement on the back of manufacturing and logistics supply chain efficiencies. Now, with this, the company is aiming to be among the top 5 companies in terms of profitability. In fact, when we look at the channel checks, they're also suggesting that the northern region, which accounts for nearly 35% of the market mix for JK Lakshmi Cement, is seeing a price hike of around 3 to 4% on a quarter-on-quarter basis in the fourth quarter. Now, this along with the company is likely to expect to operate at nearly 100% utilization in Q4 could result in Q4 EBITDA per ton crossing rupees 900 per ton versus 646 per ton that we saw in the third quarter. Apart from that, they're also expecting the benefit of lower fuel prices to start reflecting from the first quarter of the next year. and this would aid the company to narrow the EBITDA per ton gap versus the industry average. Now, the company has also recently forayed into the putty business, and the management is expecting quite strong growth there with better profitability in the segment in the near term. Now, Antique believes that the valuation post the stock price underperformance over the past 3 months seems quite attractive and in fact provides a good entry point, which is why they've maintained a buy on the stock. Target price is 910 per share.
All right, thank you so much for the details, Vamakshi. Now, let's quickly move on, and of course, we have Vamakshi again. We are not letting you go anytime soon, because you're going to take us through more details on Tata Motors. To take us through that.
Well, absolutely. We saw that Nomura met up with the management of Tata Motors, and what they're highlighting is that the demand is remaining quite strong across JLR, CV as well as PVs. Now, they've started witnessing some softening of demand in passenger vehicles, that is the PV business, with dealer inventory increasing. High interest rate environment has not impacted the business just yet, but the underlying CV demand is remaining strong, aided by infrastructure investments. Now, Q1 FY24 CV volumes could be impacted, however, due to the pre-buying in Q4 of FY23.
Okay, Vamakshi, thank you so much for that update coming in from Tata Motors as well. So keep an eye out on those two companies, that's JK Lakshmi Cement as well as Tata Motors, on the back of their management meet with a lot of analysts. Now, let's just look at, what we spoke about was crude. Now, yes, we talked about crude oil prices, how they moved as well. But gold prices, they are safe haven commodities there. So when you look at safe haven commodities, you see an increase coming in, there's uncertainty, and that is what happened for the gold prices as well. Overnight, we saw the gold prices rise as much as 5%. It was, somewhere around that $1,900 per ounce mark as well. This morning, little bit unchanged, but obviously that 5% increase was obviously showing the indication that everyone is moving for the safe haven commodities. Look at the silver prices too. They ended overnight 6.9% uptick. Copper prices seeing a bit of a gain there as well, 0.5% in terms of that one coming in as well. So yes, we did see an increase coming in the gold prices overnight. This morning, subdued trade, flattish trade coming in for the gold prices. Other than that, obviously, we spoke about Brent crude oil this morning. Subdued trade, and Brent crude oil as of now is down almost 0.4% in trade as well. $80 per barrel mark is at the range where it's roaming around as well.
And moving on, Ramdev Agarwal, who's the chairman and co-founder of Motilal Oswal Financial Services, believes that the IT is a much bigger story than we think. He sees further expansion in this sector. Listen in to what he has to say.
Okay. IT has had the most dramatic profit pool expansion from 2000. In 2000, it was not even a percentage of the total profit pool. Today, it is more like 15-17% and growing. And there is no year when it has not gained little share. So, my sense is IT story is much bigger. You don't have to stick to the current set of those top big companies. They might give you 10-15% index return or something like that. But below that, there will be a lot of companies which will try to come into the big league. So there will be mid-sized companies which will, because the economics still remain great. And then you have the new set of kind of small companies which are coming up, product companies, AI companies. And so there will be specialized services companies which will be coming up, where the cost structure is in India and the clients are all in US and Europe. So I think that business model has huge potential. We have done in last 20 this is a 23, 24 years story of Indian IT. First $100 billion took about 20 years to get it. And next $100 billion came in just about 8-10 years. The third $100 billion, I'm not talking about a small number. Third $100 billion, I believe, is going to come in 4 to 5 years. So that's the nature of expansion. And there, the players who are going to be disproportionately large, I think they'll make it.
Let's move on, and it was read across the screen yesterday with the benchmark indices slipping below the important levels. Now, what's triggering the sell-off? We caught up with Jay Bala of cashthechaos.com to understand what he actually makes of this decline. Let's go across and listen in.
Market is just entering the accelerator phase of the decline. So, that's going to be a point of recognition for many investors. That will be around 16,750, which is the September low Once that's broken, only then people will start realizing what I've been saying for several months. And the context, as I said in the first line, is that now this is entering the accelerative decline phase. So we got much more to work with on the downside. The IT is on tenterhooks, and Nifty IT, it can't afford to go much below from where it is right now. So, there are multiple sectors which are trying to, see a fresh break. 29,300 was an important level, and it could be that Reliance, banks, and IT could be leading the way down.
And it's raining good news for India today, at this time from the cricket field, as the men in blue have qualified for the World Test Championships final. India's entry into the WTC finals was made possible when New Zealand defeated Sri Lanka in a nail-biting thriller at Christchurch. Now, Team India will now face Australia at the Oval in June. And Iranian judicial authorities have pardoned 22,000 people who took part in anti-government protests. Now, state media reported early last month that Supreme Leader Ali Khamenei had pardoned tens of thousands of prisoners, including some arrested in the protests in a deadly crackdown on dissent.
And the Russian-Indian joint defense venture BrahMos Aerospace is preparing to receive a $2.5 billion cruise missile order from the Indian Navy. Moving on, also talking about the cyclone Yaku has brought in heavy rains in several coastal regions of northern Peru and southern Ecuador. Now, Peruvians in Lima were feeling the impact of the flooding on Monday from the heavy rainstorms caused by the cyclone. India will host the Shanghai Cooperation Organization Tourism Ministers meeting from 17th to 18th March, and this is going to be held in Varanasi, which has been designated as the first cultural capital of the SCO Ministry of Tourism.
And well, with that, we're completely out of time on this one. You don't go anywhere. There's market coming up next. Thank you so much for tuning in.